going to be looking after the financial issues. There's a lot of change in the cabinet also. But when it comes to this particular issue that the trade gap is widening, there is a budget that is supposed to be announced in June. First week most probably, hardly any time is left. Yesterday the cabinet members, they took charge. Today is perhaps the first day when they'll be in their offices. A lot is happening. But the economic challenges are huge. What sort of challenges the current government is going to face? What about IMF? What about the current expenditure? How they're going to put a check on that? How to control the imports? How to make sure that exports are better in the future as well as in this particular year? Almost 3 months of this fiscal year are left. Inflation is almost in double digits. You talk about so many promises that were made earlier, they were not fulfilled. Now the government says that the prices of sugar, they would be not more than 75 to 80 rupees perhaps. So in the case of fuel, they wanted to increase. The summary was sent, and that was something which everybody thought was crazy, but it was not accepted by the PM. And now, sooner or later, there is going to be a lot of pressure on the government. They need to have money to spend money. Now, before I introduce you to our panelists, our production team has prepared a package. Let's watch that first.
Prime Minister Shehbaz Sharif's dynamic cabinet, with all the high spirits to improve the economic conditions of Pakistan, has finally kicked off its administrative duties. However, the economic challenges which Pakistan is currently facing are quite daunting and require a comprehensive plan of action which can give a true relief to a common man. Such challenges are also documented in the latest World Bank's Pakistan Development Update. According to this report, the economic activity in Pakistan had maintained its momentum during July-December 2021, but the high demand pressures and rising global commodity prices resulted in double-digit inflation and a sharp rise in the import bill during this period. The report stated that long-standing structural weaknesses of the economy, including low investment, low exports, and low productivity growth, pose risks to a sustained economic recovery. The World Bank's country director of Pakistan in this regard stated that Pakistan's economic recovery after COVID-19 crisis indicates that the country has enormous potential to overcome challenging economic situations. However, sustaining the economic recovery requires addressing long-standing structural weaknesses of the economy and boosting private sector investments, exports, and productivity. These red flags were also documented in the recent World Economic Outlook April 2022 report, in which the current account deficit is predicted to rise to 5.3% of GDP by June 2022 from a previous forecast of 4.1%. On the other hand, the IMF in this report has also raised its inflation forecast for Pakistan to 12.7% on an average for the current fiscal year from a previous projection of 9.4%. Moreover, report declared the consumer price index inflation was at 12.7% in March 2022. The International Monetary Fund, keeping Pakistan's growth forecast at 4% for fiscal year 2022, warned that due to the rising inflation and changing external environment, the country's current account deficit and inflation is expected to grow. With these projections of IMF, Pakistan's resumption of talks with IMF in the realm of reinitiating the 7th review and the successful release of $6 billion extended fund facility will undoubtedly be a challenging task.
Welcome back. Now, we have with us in our studio, on my right is Ali Salman Saab, heading the Prime Institute. Thank you very much, sir, for your time. And we have with us Sardar Faheem Saab, who is a senior economist. Thank you so much, Faheem Saab, for your presence as well. And we have with us Ariba Shahid. She's joining us on Skype from Karachi. She is a financial journalist. Thank you very much, Ariba, for your time as well. Pleasure to have you on the show. Now, Ali Salman Saab, change in the regime, change in the government. A man who is known to be a doer, and that is none other than Mr. Shehbaz Sharif, has taken over as the Prime Minister. This man gets up early in the morning, stays out, gets the work done. This is what he's known for. And that is what our observation is also about if you look at the past 3, 4, 5 days. New cabinet is in place. Mr. Ismail Saab is in charge of the finance side. Huge challenges, multiple tasks, a year and a half left, provided if they complete this portion of this term. Strong opposition, and you're seeing what all is happening, sir. Let's start off from the economic challenges. Number one, There you go, sir.
Well, I think you mentioned Mifta Ismail. I should mention that just a couple of days ago I was in a conversation along with other economists with Mifta Ismail Saab. And first thing I need to acknowledge is I think his grasp of economic challenges is quite inspirational, and I think he understands the economic challenges very well. If you ask me, number one problem which the government is going to is already facing, is obviously the balance of payment crisis. So the fact that our forex reserves have dropped down to just about $17 billion, and out of which only the state bank has $11 billion. But I think the underlying fact is that underlying this balance of payment crisis, there's a bigger fiscal deficit. The fact that we are not earning enough to meet our expenditure, and the single most important driving factor of our BOP deficit is actually the fiscal deficit. And since the economic policies cannot be isolated from the political environment, we must recognize that the previous government took this decision of freezing the petroleum prices till this budget is going going to huge fiscal challenges. It's
over 300 billion, that's what I've heard, maybe more.
But if you include the foregone tax revenue and other which governments collect, that's going to be about 800 billion rupees.
800 billion.
And that's not a small amount. You can run an entire federal government. The civilian government expenditure is about 800 billion rupees. So just one decision, if you don't take the right decision, if you show sort of a lack of fiscal responsibility, that can lead you to serious troubles.
You think the decision shouldn't have been taken at that time, sir?
Yes, certainly not. And as a group, Prime and our group,
which is supposed to be passed on to the people, sir, perhaps that is supposed to be a decision great in the favor of the public.
Well, we have talked about it, and I think we have favored the social protection program to some extent, where SARS program is in place, and there is a mechanism of transfer of cash to, let's say, 4 million households who deserve because they fall under the poverty line. But these untargeted subsidies, of which fuel subsidy is, the most worrisome example, are not good for anyone. And in fact, Mr. Ismail said, in that conversation, that for his own company, if he is a truck driving from Karachi to Islamabad, the government of Pakistan is going to pay him or his company 50,000 rupees on just one single trip as a subsidy, and he doesn't deserve that. And so you can imagine one example, and imagine that applied at national level, and what kind of chaos is going to now will witness, unless of course the government reverses.
So that's up in your point of view. I mean, Ali Salman Saab just mentioned the balance of payment. That is number one issue. So we talked about that. Your take? You agree with him on that number one issue?
I agree with that. I'll just sort of step back and broaden my view at least. I'll just simply say the government needs more internal and external revenue. It's as simple as that, because everything stems from there. Now, internal revenue is based on tax, direct tax, indirect tax. External revenue is going to be, it's in the form of your convertibility of the rupee. Now, if exports keep rising, aggressively, as have imports, so you're actually earning money, you're actually making money. So the bottom line is that the government needs to generate more revenue. The government needs to generate more, as I call it, internal and external revenue. As Ali Saab has just very lucidly explained, what the fiscal deficit issue is. Right now we have, I think for a period we had unabated imports, which caused a rise in deficits, because we do remember we had a surplus last year or the year before, or we had a very small deficit for a long period of time. Now the bottom line is it's not what we do, it's how we do it. That's how I like to define it. It is very clear that the government is going to be taking a practical approach to a market approach, so to speak, to dealing with things, which is basically that in order to raise revenues, until you can raise revenues, try to cut down on costs. When you cut down on costs, you basically are creating buffers, bubbles of equity for yourself. Having said that, the government is going to be very aggressively focusing on tax collection, especially with the budget coming up. All, I think, if there are any exemptions left.
So we always hear about this increase in the tax base. Every government, whosoever comes into power, the first thing they talk about is increasing the tax base.
Yes.
So it's not happening to that level. I mean, I've heard so many finance ministers, from PML to People's Party to Pakistan Tehreek-e-Insaf, saying that, we have identified X number of people, now we'll do this. I mean, these are not popular decisions.
Precisely.
Nobody takes that.
Precisely. Precisely. And adding to what you're saying, I was just about to get to this point, that there are approximately 5 million traders in Pakistan, small traders. There is a scheme made by FBR for small traders, 150 square feet and 300 square feet. They have different taxes. There is minimal human intervention. I would really like to see what the result is of this scheme, because they pay tax once a year. There is no human intervention. If you have an FBR certificate, no one can harass you. So I'm just very curious to see all the incentives all the initiatives that were taken. I want to see the results of those before I comment even further. Having said that, the government is going to be focusing on direct and indirect taxes, both. And I have a sneaking suspicion that will end up leaning towards indirect taxes because they're slightly easier to manage. And if petrol levies, fuel adjustments are not levied onto the public, there's going to be a massive explosion in the deficit. So this was a temporary thing. It will have to be done. Oil prices, we basically import most of our oil, which is approximately 81% of our requirement is imported. We don't consume that much oil, by the way. That's the irony of the whole situation.
Then where does it go?
No, we don't. We're just not producing enough oil. We're just not producing enough oil. I'll give you an example. Pakistan has, over the past, since the 60s, Pakistan has increased its oil production capacity from 11% of consumption to 20%. So since 1965. So that's not very heartening. You see, there has to be a massive increase in oil production. You have to look at the major expenses that we face.
So sooner or later, we have to adjust our energy mix. There is no other way
Absolutely.
out. Perhaps that is the real problem at the moment, because if you're an oil importing country, you're not Venezuela, let's suppose, or you're not Nigeria. Even I'm just looking at those countries which are having a lot of issues, but still they have a lot of reserves. The point is that a country like Pakistan, it is the attitude. I mean, look at the amount of water we waste, clean drinking water. Nobody is thinking what the future is all about. Water is going to be the real problem. You can live without the electricity, so you can't live without the water. And we always claim that we are an agro-based country, and I don't think that we are to that extent, the way we think that perhaps things are, but water is going to be the real problem, sir.
If I can just add one point, that you mentioned Venezuela. The interesting thing is Pakistan consumes oil roundabout equal to Venezuela and Malaysia. We're the 6th largest country on earth, so we're not consuming that much oil, but the fact is we're not producing enough oil domestically, because we keep importing it and we're constantly exposed to the international prices. If we were producing, let's say, 60, 70, 80, 90, 100, 110, 120% of our oil requirements, we would have just saved ourselves from approximately $9 billion.
And increasing reserves of oil as well.
Of course. And I mean, just to my final point, we have to very carefully analyze our major imports. One is crude oil, one is edible oil, then we have some machinery. We just need to substitute them. We've done a lot on edible oil. We've done a lot of work on that, but we just need to do it on war-footing basis.
All right, sir. Now, Reba, there is a general concept that this particular government, since they have taken charge now, there's a cabinet in place, so most likely the Americans have also appreciated the change. I mean, if you read their stories or their articles, especially in New York Times or in other papers, there is this general perception that FATF issue is going to be resolved, number one. Secondly, the Prime Minister most likely is going to go and visit Saudi Arabia and China. And there is a hope that we will get some good news. And we know what good news are we talking about. So let's talk about that, sir. FATF. No more grayness, sir. You're back in white.
Yeah, I mean, first of all, we need to recognize that there has been a result of a constitutional and democratic change of the government. And I think we need to trust that the system is now capable of bringing these, changes without disrupting a lot of policy outlook. And secondly, I would like to also recognize the efforts which were put in by the previous government in improving Pakistan's compliance on FATF. So there has been considerable progress made, and we knew that. In fact, I remember last time we talked in your program on this issue, and Pakistan had made significant progress, except a couple of other, clauses. So I expect.
How the same issue was there, sir? We have also learned. I mean, there isn't much in the newspapers or in the Pakistani media channel, but what I've learned and I've confirmed, I'll repeat, I've learned and I've confirmed that he has been sentenced to 32 years.
Yeah, that's right. I think.
So if even for 30 years, sir, because there was this confusion, 31 or 32, but that was the real issue.
So there's something which in the Pakistani government or state has been doing right to actually come up with this, improve the compliance issue, and we hope that this thing can improve. But on the other side, I think if you talk about the economic implications of this increase in confidence of, let's say, the international organizations, IMF, World Bank, but also our friendly countries, it is important that we go back to the basic fiscal prudence. That is the thing which they would look for. Right now, unfortunately, Pakistan also partly, given how external situation, how Ukraine situation is playing out, Pakistan default risk has increased considerably.
Look what is happening in Sri Lanka.
And Sri Lanka is a case in point. So we need to take, I think very well-measured and well-prepared steps towards achieving economic stability and giving the right signals to the investors who are in Pakistan, giving the right signals to the international investors, giving the right signals that, okay, we mean business. And what is most important is that consistency in the policy outlook is the most crucial aspect which any businesses or international organization would look for. And also, I think we need to recognize, and the current leadership is fully, fully appreciate the fact that Pakistan cannot be isolated. Pakistan depends on EU, on US, on other countries for trade. We're not talking about aid money here. We're talking about where do we trade. So they are
trading partners. You talk about,
trading partners. So yes, Saudi Arabia or China would help UAE, and currently, I mean, if you look, there is a report that all the $11 billion in our foreign exchange are not actually our earned money. It's the deposits from these friendly countries.
What if they take these deposits back? I'm just saying.
So it's a pressure on the government.
Remember, it has happened before also.
It has happened, and there we need to play carefully in terms of diplomatic relationship.
All right.
Ultimately, we need to give that okay, we are in charge, and we know where the economic policy is headed.
All right. Now, so do explain one thing to our viewers also, and to me, as a layman, we heard that Sri Lanka is at the verge of defaulting.
It has announced default. It has announced already.
So what I'm saying is that what exactly happens? Because you don't have money. They have said that, listen, we can't give money to IMF. I mean, we can't even pay anything. This is what our condition is. So what all we have? I mean, they had hardly a few $100 million left in their kitty, and at the end of the day, they said, well, this is to import some food and import some oil. What if there is a worst case scenario, sir? There is no money left, and you have to make payments of IMF or XYZ, or for example, if you have floated bonds, you have to do payments as well. Oil imports, if you're an oil importing country, food. I mean, you just mentioned about the overall economic situation. Sir, I mean, pulses. I always thought that we grow. Because we do grow certain crops in our lands also. So I understand. But just imagine that 80% of your pulses are also imported. Then why are we called the agro-based country, sir?
We are not actually.
We are not actually. This is what I mean. Don't you think we have to get out of that confusion and think who we are, sir?
Absolutely.
Because painting a horse won't make it a zebra. Honestly.
That's true. Okay, the concept of a default is very interesting because America has, I think, defaulted 3 times. We don't talk about it, very frankly.
But that is not the right example.
No, it is. Actually, it is. With all due respect, it is. There's only one reason that they just print more money and they just give it to us. That's the only catch here. When an entity or a country, let's start with a country, defaults, before it defaulted, it had accepted certain terms. When a country is given a financial benefit or a financial facility or a financial program or whatever you want to call it, it's based on certain caveats, terms, conditions, and it's based
like a bank loan which you take.
It's an indenture, very frankly speaking, and that indenture is very clear and crisp about what happens if you default. Now, many countries have defaulted. Greece defaulted, Argentina defaulted.
I remember.
America defaulted. So it depends what the situation is. And one of the biggest effects of a default, which nobody is discussing, is the possible collapse of the IMF or World Bank. People are not talking about this. This is a very critical thing. Gambia it was 2 decades ago, almost defaulted on one of its loans, and that basically shook up the World Bank. So I'm not going to talk about that right now. When a country is on the verge of default, that means it's basically not able to pay its dues. Now, if it cannot print more money in its own currency, that happens when you have a domestic debt. So they can print more money and just take care of the dues. But when it comes to an international liability, you have to pay it in the currency taken. So if it's in dollars, you have to pay in dollars. If it's in euros, you have to pay in euros. If it's in reals, you have to pay in reals. If it's, now that we know it's going to be in won, you're going to have to pay in won. So in order to get those currencies, you have to be able to go to the market and sell your currency and buy that currency.
If your currency has that kind of a value. Because in 1953, can you imagine in 1953, Indians signed a deal with the Russians to do trade in ruble and rupee.
Yes.
Imagine. I mean, they were so smart in 1953. They knew it.
The point is that when you look at the financial stability of a system, a default is something which is now going into the red zone. It's, by the way, a default is actually quite profitable for the lender. We have to understand that. So I won't get into that. So when a country is about to default, what it has to do is, if they have absolutely nothing else to do, they will go for another round of financing. So they get another round of financing, which for the time...
Previous would remain there, or is it going to be waived off?
I'm just coming to that. That is going to remain exactly where it is. For the time being, you get more funds to pay off the existing liabilities, but in the medium to long term, what happens is the true weight of your debt starts to show, which is that you had a previous debt that was not paid for. You got a new loan to pay off a previous loan portion. So that creates a compounding effect, which is to be avoided. South Korea is one country which basically paid off all its debts and then became a lender. So for that, you have to institute extremely rigorous economic programs. You cannot allow even 1 rupee to be hemorrhaged. I've spoken about the hemorrhage in our economy, not once, not twice, but I've been talking about it for the past 7-8 years. So you have to plug all the holes. You have to make sure nothing is lost, and then you move forward. The Sri Lankan case, because I'll just stick to what the example that you started with. The Sri Lankan case appears to be much deeper than it appears. It's like an iceberg. Their debt appears to be, there is of course some geopolitical angle to it, but we have to understand that their economy deep down had some frailties, some weaknesses which have erupted. And this is not something new. This is not something that's happened in the past 2-3 years. To be honest, I'm not exactly sure.
So they knew about it, and they were just keeping it under the carpet, right?
It appears. And they thought that, you see, there's a concept, a very dangerous concept, that spend your way out into growth. That's That's a very dangerous concept, because you're not printing your own. The Sri Lankan currency is not well traded on the international stock exchange, international markets. The United States of America, for the time being, has the luxury to print more money and just, spend it.
Multiple reasons, petrodollars and so on and so forth. Yeah.
So, which is changing, by the way, because now the Saudis are going to buy oil, sell oil in yuan. So this is something.
But there's another factor. I mean, since you've raised this issue, and it was in 1974, if I'm not wrong, 74, 75. Kissinger was the Secretary of State. Nixon was the president. The deal basically which they signed was that no matter what happens in Saudi Arabia, their real would be kept at 3.75 to $1, and it would never let Saudi Arabia default.
That's a peg. That's a peg. And that peg is helpful when your economies are sort of mirroring each other. It sort of gives, you supplement them, they supplement you. So it's like a boost.
Wasn't it because of the deal that was supposed to be done in dollars, petrodollars? That's how the concept emerged, right?
I mean, that's true, but the dollar the export of dollars started in 1945, not in the 70s. This is just one transaction. The export of dollars.
No, but Saudi Arabia also convinced the other countries, the oil exporting countries, to do trade in dollars. So anyway, that's a very separate yeah.
If you look at the quantum, if we step back and look at the broader quantum of international trade, oil trade is very important, but you see coffee and pork bellies is much higher. So we need to sort of step back and see the exact quantum of the whole situation. The economy of Saudi Arabia is $600 billion. It's not that big, by the way. We need to sort of look at the numbers. I'm not going against the grain. I'm just putting facts in front of us. When the question is of default, a default must be avoided at all costs, because if a country defaults, a clause is enacted. And based on that clause, all your assets can be foreclosed upon. They can be taken.
Hostile takeover.
Aircrafts. I think I'm predicting here, I could be wrong, but I think one of the ports of Sri Lanka is about to be taken. Given in No, aside from that.
The other one?
Yeah.
Well, they were looking forward towards China and India to sort of.
That's where the geopolitics comes in.
Yeah, exactly.
If I could just come in very quickly on the numbers, I think just to provide the context. So a couple of years ago, Sri Lanka, out of its budgetary resources, were almost reaching 100% of its revenue were being blocked for repayments. For liabilities and debts, 100% of whatever Sri Lankans were earning were being,
we always cry about the 3Ds.
In our case,
they had just one day bigger than our 3Ds.
In our case, we are not there yet. I mean, in last budget, we had about 40% of our resources were blocked for repayment, and we'll see how the fiscal deficit would actually materialize. But just to provide you context, our group, Economic Advisory Group, recently did some number. And we showed that since 2019, our external debt servicing payment is hovering more than $10 billion, and previously it was in the range of $4 to $5 billion. And next 2 years we have to pay about $35 billion. So this is not a small
and everything is going to remain constant. Don't think that we're paying more to get rid of the previous one.
That's right. So there are challenges ahead.
Yeah.
But
the more money we take, obviously there's more interest. So the
and
overall volume goes
invested in new assets in last couple of years. Yeah.
Thank you very much for your input. Inshallah, we'll be getting more time in the next program. Thank you very much, gentlemen, for your precious time as well, sir. And that's all we have for this up. I'll see you again. Till then, you take good care. Khuda Hafiz.